Hey, hi. Today I just wanted to share with you a bit about um, the current market fears. As you can see, there's been 7 to 8 weeks of consecutive decline from the Dow Jones to the Nasdaq, and while I have not been spared as well, even though I'm only 10% in the stock and 90% in cash, which I think this year would be a good strategy for me, but I will only kind of like DCA into my respective selected stocks, provided it has gone down 20% or more. Let's look at current fears right now, which are primarily two, which is the geopolitical fears, and then the second one is inflation. Two of them are tied together in the sense that number one, on the geopolitical fears, there's also on the decoupling of all these open trades that's been happening, and um, every country is becoming more resilient in having their own reserves and having their own factories back in their countries because of all these supply chain fears that's been going on since the COVID crisis until now. And then the second thing is the inflation that is fears that is global, not just contained in the US, especially in the core aspect, i.e., energy, housing, and food. There are discretionary consumer inflationary pressure as well, but I think the Fed is actually working on it right now by doing the cratering of the wealth effect on the stocks and crypto, as well as increasing interest rates. Not sure whether it's going to be the hawkish method or the dovish method, which is, but of course, the end result is to create a soft landing. Um, Remember, I believe that the Fed is actually behind the scenes working on the discretionary expenditure right now. As you can see, all these luxury holidays and luxury spendings on cars and all that will be reduced because of the wealth effect wipeout in households, especially to the millennials on cryptos. So they are all pretty much good signs, but there is a global slowdown um, in terms of especially poorer countries. It will affect the P&L of US companies as well. But I think for US companies, generally speaking, the real economy part are still doing strong. The US economy or companies are definitely gaining traction from becoming the substitute business partners to Europe, from supply of gas, energy, oil, and wheat and all that, and fertilizer, as US has a reach in resources. Of course, inflationary fears would be more serious on countries like Singapore. I did mention that the PM Lee also did come out and actually say that it's a very serious problem because countries like Singapore, they have a stockpile, but the stockpile can last them a couple of months only, I think, or a couple of years, or 1 year maximum. They need to constantly import. As you can see, there are many countries like India and even Malaysia recently also mentioned that they might want to curb, temporarily stop their chicken poultry exports. And India is about the wheat export to the world. As you can see, countries like Egypt and all that, the poor countries, they rely 80% of their imports of wheat from Ukraine. So you might see famine coming up and all that, spiraling of core items, maybe not the discretionary ones, globally. Even though US may be insulated, but US companies may, may have the pricing power, but demand may go down. So, but one thing good about US is job market wages spiraling may stop and it might start to inflect downwards, and that input cost increase in this potential increase in this input cost will be lessened. Raw materials may be still high, but of course, if they have pricing power, they can still maintain the profit margin, uh, even though there are higher input costs and also lower number of purchasing powers. I still think that overall their profits and all that would still be as good as pre-pandemic, or a bit lower. So let's see. If of course I will try to analyze this on another video about how companies generally fare right now in the current real economy and versus the 2019 or 2020, the first 3 months of businesses that they have been able to carry out. So I just want to share with you right now about stock investing. Of course, the greatest fear in the market right now, where Warren Buffett once said, "Fearful when others are greedy, and greedy when others are fearful." So I suppose you might want to adopt this or even have some discipline, dollar cost averaging method, as currently this is the situation right now. Uh, Other things that I mentioned about the catering of markets growing actually the whole consumer psychology. This is very important. As you can see, 2020 study says that every dollar lost in stocks leads to a 3-cent reduction in spending. After a 5-month sell-off, that's about 300 billion cent this year and about 18.5 trillion in annual disposable income, and that will be reduced. Yeah, so these are all pretty good signs to show that inflation definitely is on the way down. Um, this is about the quote on the be fearful and when others are greedy. And these are the investment strategy that you may want to adopt. Of course, the Fed, what the Fed can do, of course, Bill Ackman says that more aggressive Fed is important. I don't think so. I just want to show you wait, I want to show you economics that recently did mention that the U.S. Should seek for alternative methods and not just about increasing interest rates as the only tool to reduce to slow down the inflation. So yeah, of course, the core items like energy and will still be a difficult thing for Fed to tackle. Especially you can see all these negative catalysts coming out, like Russia blocking the ports of Ukraine and prohibiting them from exporting their stuff, especially wheat and all that, which Europe and Northern African countries are relying on. And then you got this energy crisis that's coming up in Europe, especially during winter when they need more energy. I hope their stockpile from now until November, December are sufficient for them to last through the winter without having huge reliance on US on Russia oil. So I just want to show you this article. Um, Second. Probably I'll put this up in another video in another time. So yeah, this is just to chat with you about what generally I think about the stock and what the Fed's tools that's available for them. So thank you, and I will hope you like the video and my insights. And please subscribe and like the video. Thanks a lot.